4 or so on HDFC Bank. Well, Intellect Design is another company which is in focus. It's seeing a sharp cut. It sold off big time yesterday, and I think this is, of course, the results reaction. While year-on-year revenue growth looks good at 25%, it is flat sequentially, something the company hasn't seen in the last few quarters. Further, Intellect Design has also seen gross margins decline by 180 basis points this time around. Arun Jain is chairman and managing director at the company. He's joining us right now to take some questions. Mr. Jain, thanks very much. Great to have you with us here. So as I said in the lead-in, year-on-year revenue growth looks good, but quarter-on-quarter it's flat. Margins have taken a bit of a beating. Let's just start there, if you could explain this.
Yeah, I think Indian industry is familiar with the service sector, which service sector grows quarter on quarter, and we have given multiple times talking to you that it's a product is a annual business. The deal sizes are ranging between $3 million to $10 million, and each deal which is $3 million to $10 million can make a huge difference to the quarterly margins or quarterly revenue. So both the sides, quarterly margin is dropping down by 180 basis points. So it's not a standard services system where we grow quarter on quarter because number of headcount can be put or bodies we can put on the system and generate the revenue. So for my advice to all the investors is when we are working, our license link revenues are more than 1,060 crore. This is the first company maybe where a company, Indian company is getting 1,000 crore plus from the license link revenue. All the licenses, IP we created. That has a life cycle of next 10 years. So that's where this 1,000 crore is equivalent to 10,000 crore of the next 10 years revenue of license link revenue. And that's where the company metrics has to be different. But unfortunately in the Indian market, we don't have any other referenceability where investor can understand. Maybe Tata Elxsi is a small product company in that area, which has crossed that hump. So that is a kind of a better comparison for Intellect Design than IT industry.
No, I take that point. Arun, hi, good morning. But, perhaps, and you can correct me if I'm wrong, I'm going by what, my research analyst has told me that, you had guided the market about a 30% EBITDA margin over the 2 to 3 quarters. That hasn't come through. So maybe that's why the market's disappointed. I was saying, in this kind of businesses, there could be fluctuations. So perhaps you should not be guiding for that in that case?
No. So I think our design is for 30%. We had lost one deal, Russia-Ukraine deal of $4 million. If $4 million deal could have been the top line, bottom line, it would have been more than 30% EBITDA margin. Because $4 million would have given 30 crore additional revenue and 30 crore additional bottom line, because that flows directly to the bottom line. So that one deal which is in Germany, which we lost just on the day of war being initiated. So I think those kind of fluctuation can drive the change, and still we are hopeful that we will be reaching 30% EBITDA margin. So, not specific which quarter. Yeah.
Okay. So you're saying that you'll head to 30%, but that may not be the case in the first quarter itself. Some part.
Some part of the year.
So on an average for the year, though, 30% is what you're guiding for in terms of margins with a 20% revenue growth. Could you clarify?
No. I'm not guiding 30% for the whole year. I'm just saying our business is designed 20% for revenue growth, 30% for the bottom line growth. While this year we did 25% top line growth compared to the and we invested back 4 or 5% additional revenue growth towards building a next capacity for the next year. So one common thing I want to repeat is 2030 is the model which we designed for EBITDA. Our next year, our tax will be higher, which is 26% tax, which will come to the standard.
Sorry, Arun. Sorry. You were answering the last question, and I think we sort of lost there. You said you lost a $4 million deal because of the war. What was that deal, and will you sort of get it back, or is this gone for good?
It's gone for good. The largest Russian bank in Germany was migrating their core banking system on our platform. They choose on our platform. So, but that bank himself in Germany may not exist.
Can there be more such risk because of the war, or is this the only exposure that you had?
And there were two deals. One was the implementation in Ukraine. Both have not been taken in this quarter. Both deals would have come in this quarter, but now there's no more risk.
Okay, a steady state margin should be what, Mr. Jain? And also you were mentioning that the license linked revenues, they have been growing. I'm looking at your breakup from less than, 45, 50% or it's last year it was around 57% of your revenue mix. Where is that
That's
number?
right.
Where is that number headed to?
So that number should head it to 60%. So that's what, and cloud revenue, in 3 years time, we build up a solid cloud funnel of $60 million. So if it is a separate fintech company in the cloud, they should be valued differently from a perspective. So today we have a run rate of 120 crore in this quarter on the cloud business, which is a very, very healthy line. In 3 years time, we move the license to the ARR model, which is annual recurring revenue. So I think the whole metrics in Intellect needs to be differently looked at it. And we have a Microsoft partnership, which is a very, very powerful method which we look at it. And winning a Reserve Bank of India deal against global competition on cloud native, first central bank going live, another private sector bank in India has given complete digital transformation, which is an equally large deal, launching iColumbus.ai, which is a trade and supply chain finance. I think very, very exciting quarter for all of us. So at Intellect, we are feeling very, very bullish.
Mr. Jain, would investments have to be stepped up significantly? I mean, you've said that you plan to enter 3 new markets. You've put out some numbers as well in terms of how much you'd want to, in terms of revenues you'd hope to generate from each of these markets. What about on the investment side? What would that look like?
Yeah, we'll be investing in sales and marketing. We'll be doing the next round of investment because we are preparing for $100 million per quarter company. So there'll be because these investments are 1 year ahead of the time. So those investments will go up by 60, 70 crore during the year. And then R&D investment may go up another 30, 40 crore for the year.
Okay.
These are 2 basic investment buckets for the next year.
Got it.
So we generated a good cash of 320 crore last year. So these are 2 investment buckets.
Got it, Arun. We'll leave it there today. Thanks a lot for joining us. As I said, for some of the companies like yours, perhaps not traditional metrics should apply, and we'll have perhaps a session with you to understand the business a bit more, perhaps in non-live market hours. Thanks a lot for joining us for the day.
Thank you.
Let's now move on and to